In this video, we're going over term life insurance, what it is, how it works, who actually needs it, how much coverage people usually get, and how to evaluate a policy in the real world without getting overwhelmed or sold to. Term life insurance is one of those topics that sounds intimidating, but once you understand the structure, it's actually very simple. The problem is that most people never get a clean explanation. They either hear conflicting advice, get pushed into products they don't understand, or avoid the topic altogether. So my goal here is to walk you through term life insurance from the ground up in plain language, step by step, so that by the end of this video, you actually understand what you're looking at and how to make a decision. I'm Erin from Insurance Wise. Let's start with the basics. What term life insurance actually is. Term life insurance is the most straightforward form of life insurance. At its core, it's a contract. You choose a specific amount of coverage and you choose a specific length of time, usually 10, 20, or 30 years. If you pass away during that time period, the insurance company pays out the coverage amount to the people you name as beneficiaries. That payout is generally tax-free. If you outlive the term, the policy simply ends. There's no payout, no refund, no surprise there. That outcome is actually built into the design. The reason life insurance exists is to cover temporary financial risk that shows up during certain phases of life, like when someone depends on your income, when you're paying off debt, or when you're raising kids. It's not meant to be permanent coverage for your entire life. It's meant to be there during the years when your absence would create the biggest financial disruption. Once you understand that purpose, a lot of confusion around life insurance starts to clear up. Now that you understand how term life insurance works conceptually, the next step is seeing how this actually looks in practice. For the rest of the video, I'm going to use Lemonade as an example, not because it's the only option and not because you need to use it, but because it lays out term life insurance very clearly and makes it easy to visualize how policies are structured. If you want to follow along visually, you can click the link below to open Lemonade's homepage so you're looking at the same screens I am. What term life insurance is really designed to do. Once we move into a real-world example, what matters most isn't the numbers on the screen, it's the way the coverage is framed. If you look at how Lemonade presents term life insurance, the language consistently points to protection during a specific window of life. Not forever, not as something you hold onto indefinitely, and not as a financial asset you build or grow. Instead, it's positioned as a temporary layer of financial security that exists for a reason and then intentionally disappears. That framing is important because it mirrors how insurers themselves think about term life. This isn't coverage designed to follow you from birth to old age. It's coverage designed to exist while something or someone relies on you financially. Term life insurance exists to replace function and not value. That distinction matters more than most people realize. Insurance isn't trying to assign a dollar amount to your life. It's not asking what you're worth as a person. It's asking a much more practical question: what stops working financially if you're gone? For most people, the answer is income. Paychecks that cover rent or mortgage, contributions that support childcare, groceries, insurance, and daily expenses. Term life insurance steps in to temporarily replace that lost income so the people who depend on it aren't forced into immediate, life-altering decisions. But it's not just income that's being replaced, it's stability. It's time, it's the ability for someone to grieve, adjust, and reorganize their life without being forced into financial panic. When term life insurance is structured correctly, it buys space for a partner to stay in the same home, space for children to remain in the same school, space to make thoughtful decisions rather than rushed ones. And that is why term life insurance is always tied to time. The length of the policy isn't arbitrary. It's meant to match the period during which your absence would cause the most disruption. When that That dependency fades when kids grow up, debts are paid down, or financial independence increases. The purpose of term life insurance fades with it. And that's why the policy is designed to end. Seeing term life insurance through this lens changes how you evaluate it. Instead of asking how much is this worth or what do I get back, the better question becomes what role does this coverage play during this phase of my life? That's the meaning of term life insurance. It's not a product meant to accumulate or last forever. It's a tool meant to quietly do its job during the years it's needed most and then step aside. Dependency is the core concept. This section is where Lemonade becomes a teaching tool and not a product. When you look at the screen, you'll notice how the coverage is framed around things like income, housing, education, and outstanding obligations. These aren't random categories, they're visual ways of showing what continues financially when someone is gone. In other words, they point to dependency. Term life insurance isn't about predicting a death, it's about acknowledging dependency. If your income supports rent, groceries, childcare, tuition, or loan payments, then your absence creates a financial gap. Term life insurance exists as a temporary mechanism to help fill that gap while the people who depend on you adjust. What matters here isn't the exact category labels on the screen, it's what they represent. They represent ongoing responsibilities that don't disappear just because a person does. Once those dependencies and when debts are paid down, children become financially independent or income is no longer relied upon. The need for term life insurance usually ends as well, and that's why the length of the policy matters just as much as the coverage amount. Term life insurance is not meant to last forever. It's meant to last exactly as long as dependency exists. Time is more important than money. One of the most misunderstood parts of term life insurance is that time is the primary variable, not price. When you choose a 20-year or 30-year term, you're not really deciding how much insurance to buy. You're deciding how long coverage needs to exist. A longer term doesn't mean better coverage. It simply means the policy stays in place for more years. And the reason someone would need coverage for longer is almost always tied to dependency. Parents often choose longer terms because financial dependency lasts longer. Children don't become independent overnight. Housing costs, education expenses, and basic living needs stretch across years, sometimes decades. On the other hand, someone with no dependents, no shared financial obligations, and no one relying on their income may not need term life insurance yet at all. Using Lemonade as an example, seeing term lengths presented this way helps reinforce how term life is meant to work. Coverage is selected for a specific span of time, not automatically for an entire lifetime. That structure reflects the purpose of term life insurance. Coverage is tied to a phase of life, not permanence. This is also why buying coverage for longer than you actually need doesn't make you safer. It just means you're insured beyond the period of dependency. And once dependency ends, additional coverage doesn't add protection, it simply becomes redundant. Why term life has no cash value. Another place where context matters more than cost is the fact that term life insurance has no cash value. That's not a missing feature, it's an intentional design decision. If you look at how Lemonade explains term life insurance in their educational sections, the emphasis is always on coverage that exists for a specific period of time and for a specific purpose. There's no mention of accumulation, savings, or long-term value building because that's not what term life is meant to do. Term life insurance is designed to exist only while dependency exists. Once that dependency ends, the policy no longer needs to exist either. Other types of life insurance are built differently. Some policies are designed to last a lifetime and include savings components, which means they're trying to solve multiple problems at once. Term life does not do that. It focuses on one problem and solves it cleanly. Temporary financial replacement. That's why term life intentionally has no cash value. Adding a savings component would change the purpose of the policy entirely. When people hear no cash value, they often assume that means they're losing something if they outlive the policy. But that assumes the goal was to get money back. With term life, the goal was protection during a defined phase of life. If the policy expires unused, that doesn't mean it failed. It means the risk it was designed to cover passed without incident. That's also why term life is so commonly recommended as a starting point. It does exactly what it's meant to do without bundling in additional features that many people people don't actually need. Digital tools as clarity, not convenience. The biggest benefit of modern platforms like Lemonade isn't speed, it's clarity. The ability to see explanations, definitions, and scenarios in one place makes it easier to understand what you're actually buying. This matters because insurance decisions should not be rushed, they should be understood. Any platform you use should help you answer 3 questions clearly. What does this policy replace? How long does it need to exist? Who is protected if I'm gone? If a tool helps you answer those questions, it's doing its job. What success actually looks like. Outliving your term life insurance policy is not a loss. It's usually a sign that life unfolded the way that it was supposed to. When a term policy reaches the end of its coverage period, it often means dependency has ended, children grew up, debts were paid down, income was no longer the sole support holding everything together. The financial responsibilities that once required protection evolved over time. And that's an important shift to understand because it reframes what success looks like with term life insurance. Term life insurance is not designed to pay out in most cases. It's designed to stand by quietly during the years when its presence matters most. If those years pass without crisis, the policy did its job. Many people struggle with this idea because they associate insurance with getting something back. They think that if a policy expires unused, it means money was wasted, but that mindset assumes the purpose was accumulation or return. With term life, the purpose was protection. It existed to make sure that if something happened during a vulnerable period, the people who depended on you wouldn't be forced into immediate, irreversible financial decisions. If that moment never came, that isn't failure, it's exactly the outcome the policy was designed for. In that same sense, a term life policy that expires unused is evidence of stability. It means the risk it was built to cover passed without incident. The phase of life that required protection ended and the coverage stepped aside. Understanding this helps close the loop on everything term life insurance is meant to be. It's not about maximizing payout, it's about minimizing disruption during the years when it would matter most. That perspective is central to understanding why term life exists at all and why for many people it's the right tool at the right time. Term life insurance is not about finding the cheapest option, it's about understanding why coverage exists in the first place. If you want to explore how term life insurance is structured and use Lemonade as a reference point to understand policies more clearly, you can check the link below. Use it as a learning tool, compare it to other providers, and make the decision that actually fits your life. I'm Erin from Insurance Wise. Thank you guys so much for watching, and I'll see you in the next one.